everyone, my name is Vaibhav. Today I am presenting my fin332 midterm focusing on day trading and passive equity management for Carl 1. I traded on DFM using the iVestor app. I focused on these strategies: VWAP, opening range, breakout and pullback, range swing, gap trade and bounce. VWAP is basically you find the average price of the day. You typically bought when the price was near or slightly below the VWAP level to capture a mean reservation or trend continuation. Sold it when the market was about to shut down at 245 and the sell price was 2.83. I did use the help of my brother. He does bit in the stocks, so that's why I take help of him, and he told me the strategy. And then I used the different strategy of opening range. Opening range is basically you mark the high and low for first few minutes of the session. You bought if the price broke above the high, or sold it when the price is below. In the first one, I sold it. I did short selling. In this trade, due to short selling, I did make a profit of 0.018. And the different strategies that I used was breakout and pullback strategy. In this, you wait for a price to break a key level, then entered on the retest or pullback to that same level to ensure it turned from resistance into support. In this, about to shut down as I was making a loss, so that's why I decided to back out of this trade a bit early from market to close down, and my loss was around minus 0.01. The next one is range swing. In the rate swing, you identified a box where the stock was bouncing between two prices. You bought at the bottom and sold it at the top resistance. I did make a profit of 0.03. The gap trade and bounce. Basically, this is you trade the stocks that opened significantly higher or lower than the previous day. You either faded the gap or followed the momentum. In this, I did make a profit of 0.04. Moving to question number 3, I decided to analyze a passive portfolio to get my data. I used investing.com. From this, basically I searched which ETF I needed. I needed the QQQ ETF. Then after this, I go to historical data. In historical data, I set the time. For January 1st to 2025 December 31st. This is the 2-year data which I used. This helps me to get the raw data, which allowed me to calculate tracking error, cumulative growth, INAV, to see if there is any arbitrage opportunity existed. So this is all the data which I have collected. In my first sheet, I have calculated the daily returns. My goal was to finding the tracking error, which is the standard deviation of the difference. You can clearly see the formula here. First, I have calculated ETF returns, then the index returns. Then I have squared both the values and then found the tracking error. In this, the tracking error was very low, around 0.46, which is the excellent replication as compared to index. Now, if we look at the second sheet, which is the cumulative growth, this sheet shows the cumulative growth of around $10,000. You can see the ETF index lines are almost identical. With the ETF reached over 34% growth. This proves that a buy and hold strategy works perfectly for this asset. Now, if we look into the next sheet, which is our INAV, ETF versus INAV, this is where I tested for arbitrage. I used the INAV formula. To see if there was any ETF that was trading at a premium or a discounted price. So after the calculation of any premium and discounted price, have taken their average, which was around 0.000178345, which shows that there was not a major arbitrage difference that was available to buy and sell the stocks. For the next thing is ESG summary. Finally, my ESG analysis, QQQ has an AA rating. I analyzed its exposure to tech related ESG risk like data privacy, but overall it's a strong light green candidate. I didn't just look at one kind of ETF. I have analyzed 6 to create a balanced portfolio. I choose VOO, VOO and QQQ for growth. I used VEA for international diversification. Though I noticed it had a -4 discount due to stable pricing when the international markets were closed, I added GLD, IEF, and BIL to hedge against the inflation and manage the risk. This master sheet shows that by combining different asset classes, we can optimize for both ESG and returns. In the end, I would like to conclude this project taught me that while day trading requires quick microstructures analysis like viva, long-term success comes from understanding ETF efficiency and ESG rating. All my calculations and trading proof are in my report. Thank you for watching.